Good morning, Steve Free in Chicago with the morning grain comments. Markets are lower. We've seen the dollar rally, stocks down, the metals are down, softs are up though. And I think the biggest headline overnight is that there's still a pretty good chance that in November, U.S. Fed Central Bank will raise interest rates 75 basis points. The last 2 days, stocks have had a huge rally. Dollars had a huge break, and grains, for the most part, have rallied on talk that maybe central banks will back away from large increase in interest rates and maybe not increase interest rates during the entire year of 2023. Kind of comes down to what the Fed sees as definition of inflation. It's going to be hard to do something about higher wages, higher rents, and I think over the winter you'll see higher energy risk and also higher food prices. We also note that the market's getting ready for the October 12th USDA monthly supply and demand report. In the corn, they could lower the corn crop and but at the same time lower exports and leave the carryout unchanged or maybe a little bit higher. In the beans, I think most people think they're going to raise the bean crop and lower exports, which would raise the carryout. So in both cases, that could be a little bit negative number, depending upon what the USDA thinks demand for U.S. corn and soybean exports is. We also note that for the wheat, they could lower the U.S. wheat crop, but raise Russia. And wheat's all about the next move Russia's going to make as Ukraine takes over territories that Russia annexed recently. And we just really don't know how much wheat Russia will ship out of the Black Sea and how much corn Ukraine will ship out of the Black Sea. As far as weather is concerned, U.S. Midwest remains dry. That's good for harvest, but bad for barge movement on the waters as water levels decline. We also see mostly dry weather in the southern plains, although one of the long-range maps does put some rain in the central plains day 9 and 10, but it looks like they're just way too aggressive with that forecast. Central China is getting a little bit of rain, but most of the Yangtze River Valley remains dry, and you still have COVID restrictions that's reducing the Chinese economy, and now there's current concern about loans to the property companies, and we're seeing China going to the bond market to try to increase their bank reserves. We also note that one Swiss bank continues to be a concern about their stability in the marketplace, and they and another German bank combined is 4.5 times bigger risk than the Lehman Brothers economic collapse when they had to shut their doors. We also note that we'll be watching anything out of Washington concerning things like biofuel, and today's weekly ethanol demand data, and then tomorrow's export sales data to see if that gives any data for the USDA to lower U.S. corn and bean exports. Have a good trading day.